Hey everyone, and welcome back to another episode on the Financial Madness. My name is Kozan and I'm here to help you be better with your money. So in this episode, we're going to be talking about savings accounts. For the vast majority of Brits, when it comes to saving money, most of us will put the majority of our funds into a savings account. But with interest rates at an all-time low, putting money into a savings account will hardly return you anything in interest. And if you think you're going to return something substantial in interest, you're probably not. That's because inflation, which averages around 2%, is probably eating away at any savings that you have at this point in time. For those that are trying to reach financial freedom, it's really unlikely you can do that with just savings accounts alone. However, if you choose to invest your money rather than saving it, you have a better chance of getting a higher return for your future. But that doesn't mean you shouldn't have one. It's always important to have instant access to some cash to help you cover for any unexpected short-term costs, and savings accounts are the best ways to do that. So let's explore some of our savings account options and make sure that we're getting the best rate possible. So there are four main types of savings accounts that we should all be aware of, and I'm going to go through them and quickly explain their pros and cons for each type of account. Number one is the easy access savings account, and this is the account that is typical for most savers here in the UK, just because it's usually associated with a current account. The pros for this, because it's instant access, it's a great place for us to store some additional cash to help us cover any unexpected short-term costs. Another benefit is that you're saving at your own pace. You're not going to be committing to any fixed term rate, so you don't need to put in X amount of money in that account per month, nor are you typically restricted to the maximum amount. And if there is a maximum amount, that maximum amount is quite large. However, a disadvantage for having this type of account is that it usually offers the lowest interest rate across all of the other savings accounts. The average that I'm finding right now is 0.8 or less. Sometimes you can go a bit higher. My savings account recently went down to 0.3%, so it does vary. And considering that the average UK person holds only a couple of £1,000s in their savings account, that means you'll only be returning a few pennies or even a few pounds in interest every month. The next is the regular savings account, or is sometimes known as the monthly savings account. So the rules of these savings accounts typically differ quite largely between bank to bank. So it's really important to look at the small print when deciding to open up a regular savings account. But what you'll find is they'll usually get you to commit to a certain amount of money to put into that account every single month. There's usually a minimum and a maximum amount that you can put in, and the interest rate that you're locking into on average only lasts for about 1 or 2 years. So one of the pros on this account is that the interest rate is higher compared to other savings accounts. But it's worth noting that this rate will only be for a fixed term and will usually revert back to an instant access savings account once that fixed term has expired. The cons on this account is that you are limited to how much money you can actually put into these accounts. I have one currently and I'm only allowed to put in £200 a month. You can get some higher, some are even lower, so it does vary. And as I mentioned earlier, you do need to look at the small print on these because there can be some disadvantages if you decide to withdraw your money outside of the fixed term agreement. I've also noticed that there are some regular savings accounts out there that do require you to give them some notice to withdraw their money, but for the majority I've seen it's quite immediate. You'll just get some disadvantages by doing so. The next type of account is something called a notice account. So these are typically advertised for people that are looking to save money for their house. As the name alludes to, you do have to provide the bank some notice on withdrawing your money. The shortest I've seen is 30 days and it can range all the way up to 120 days. So a pro on this is that you do get a slightly better savings account rate, with an average I'm seeing at the moment at 1.1%, with a con being that you will not have instant access to this cash. And last but not least is the cash ISA. I actually did a video on this a few weeks ago, so be sure to check out that video. I'll put a link in the description and in the card. So depending on your income bracket, each person is allowed to earn a certain amount of interest per year before they are taxed on it. This is called a personal savings allowance. For basic rate income earners, this allowance is £1,000 per year. For higher rate income earners, this is £500 per year, and anyone that's in the additional rate income bracket, you have zero allowance. So any interest that you earn outside of an ISA, you will be taxed on. So an ISA account is essential for anyone that's in the additional rate income bracket. So obviously the main benefit of the ISA allowance is the tax benefits that you get on it. One of the cons is that currently cash ISA accounts are offering really poor interest rates. The average that I'm finding is around about 0.8%, very similar to the instant access savings account. And with the personal savings allowance, it's really unlikely that you'll be earning enough interest to reach that limit. So it probably works out better to keep that money outside of a cash ISA account and use your ISA allowance, because you are given an allowance of £20,000 per year to use for potentially stocks and shares. I explain this in more detail in my ISA video, so please do check that out if you're a bit unsure on what I'm saying right now. So that's the 4 main savings accounts covered. So now when we are shopping for our savings account, when we're trying to look for our best deal, we're going to be coming across a term called AER, and this stands for Annual Equivalent Rate. The AER is the official rate for savings account, and it has been designed to help you make a simple, informed decision about which savings account is better than the other. Without complicating it too much, the reason why we have AER is that because without it, comparing savings accounts can be quite tricky and misleading. And that's because of something called compound interest. Compound interest essentially means that you earn interest based on the amount that you put in plus any interest that you've earned up until that point of time. Just as a quick example, in year 1, I put £100 into my savings account, and at the end of the year, I earned £5 on interest, so that's a 5% return. In year 2, the interest is now calculated on the £105 that I now have in my account, so that's the amount I put in plus the interest I earned in year 1. So now the interest that I earn in year 2, which is still 5%, gives me £10.25 rather than the £5 that I got in year 1, just because it's taken into account the interest of the previous year. As compounding can be calculated monthly, yearly, and even some savings accounts offer bonus rates as well, that makes comparing savings accounts really difficult to understand. So therefore, using the AER is a really good tool for comparing which savings account gives you a better offer. So when comparing between 2 savings accounts, the higher the AER, the better return you'll get. So now let's figure out how to find the best savings account for us. The first step to doing that is to really understand what this pot of money is going to be used for, because that will determine which type of savings account is correct for your goal. As UK inflation rate is on average 2%, I don't actually hold most of my money in a savings account. I actually hold it in investments. That's because most savings accounts don't even come close to beating the inflation rate, so I'll just end up losing money in the long run anyway. But I do keep some money aside for emergencies. So emergencies for me can be ranging from something quite drastic, like me losing my job, so I need some additional funds to cover me for a few months. Or it can be small unexpected costs that I didn't realize would come up. Things like replacing a broken phone or a laptop, or something that happened to me quite recently was I took my car for a service and I got smacked with a massive bill, which I used my emergency fund for, and it was quite good that I didn't have to touch my investments. It's always good to have about 3 to 6 times your monthly salary saved into an emergency fund. You can obviously do more or less depending on your attitude towards risk, but 3 to 6 is typically the average, and that's what I tend to do as well. And once you've decided what that savings account is going to be used for, and then I suggest you then shop around to get the best deal on your savings account. Now I have to be honest, I actually do struggle to find the best savings account deals for my personal needs, because if you look online, there's actually no central place where they compare all the savings accounts for you. There are comparison websites out there, but they are usually quite refined to a small selection of banks. So you're missing out on a whole other offering that you might not be aware of. But when I am shopping around, I usually stick to these 2 websites, which I'll go into, but it does require a bit of further investigation just to make sure that I am getting the best deal for what I need. The 2 websites I'm going to recommend are the MoneySavingExpert website and Which.com. I should probably quickly say that none of these companies are actually sponsoring this video, so this is just my honest opinion on what I think are good websites for comparing savings accounts. So we'll go on to the first one, which is Money Savings Expert. So Money Savings Account have this amazing page called Top Savings Accounts. This is actually just a blogging page, but as you can see, it is updated daily. And what they do is they go through the types of savings accounts that I've already gone through. I don't think they do cash ISA on this one, but there is another page for that. But they basically look at the entire spread of savings accounts, and they personally pick what they think are the best 5 or top 3 savings accounts. And that's usually my starting point. I usually just look at what they're suggesting when I'm looking to move savings accounts. So at the top here, you'll see that they just explain the savings accounts. I've kind of gone through most of those points through this video. So here they break down the Easy Access Savings Account, a quick mention on what that is. And here they give their top 5 providers. So you can see here we've got NS&I providing a AER rate of 1.6%, but you can see that there are unlimited withdrawals, but there is a minimum of £500. This is why I'm saying it's really important to know what the account is for, because there are different variances within these savings accounts which might make one account, even though it's got a higher savings rate, seem less appeasing because it doesn't satisfy the need for, I don't know, having access to cash instantly. So do take that into consideration. It also gives you a minimum and maximum deposit, how to open, you can do it online. And yeah, really great tool. They do it again for the notice savings account. Here we can see the AER rate is around about the 1% region with, I've not heard of this bank, Alicia Bank, I'm not sure. And yeah, and it gives you the notice. So the smallest I've seen is 35 days here, the largest being 120 days. So they actually haven't got regular savings accounts on this list. I think there's another list. Let me just cut to it. Cool. Yeah, so they've got another list for regular savings accounts. As you can see, the average here is 2.75%. You can see there are minimum and maximum monthly deposits. Some allow you to skip months, and some don't allow you to withdraw. I think if we scroll down, you can look at some regular savings accounts where it does allow you to withdraw, but there is a penalty, etc., etc. So that's a good starting point. Of course, it's only giving you a small option, but as these pages are updated daily, and I fully trust the Money Saving Expert, it's one of the websites I always come to when I am looking about personal finance stuff here in the UK. Martin Lewis, you are a god. But if you want to go into a bit more detail, Which have probably the best comparison site for products. It doesn't cover all the products again, but it does give you a larger range than any other website that I've seen. Please let me know in the comment section down below if you have another way of finding a savings account option, but these are the two best ones that I've found. Cool, so if we go to this Which blog, it kind of breaks down all the different savings accounts. So here is a good example of Which comparing all the instant access savings accounts. What I tend to do is sort of filter by AER rates, high to low, and then I sort of try and read my way through in terms of what I think is the best deal. For example, so here, if I'm just looking for a savings account, I might not be wanting to put a minimum deposit of £500. Start to save from Nationwide, minimum deposit of £1. This might be a good option for me. And then if I click here, I think it takes me to the website. It doesn't take you to the direct page, but you can work your way through here. I'll put all the Which links down below and the Money Saving Experts down below. But yeah, go through this and really try and find the best savings accounts for you. Hopefully this is a good basis for you to start out on finding out which savings account is correct for you. There's quite a lot of variables, but obviously I think the important thing is once you've decided what the savings account is for, hopefully all those variables for each savings account will sort of fit into place and you can make an informed decision on what's right for you. Now I have to say, based on my experience, you do have to keep an eye on the interest rate as it does change, typically over 1 or 2 years. So I used to have a regular savings account with Santander. They used to pay me a very nice interest rate of 3% every year, but I was limited to putting only £200 into that account every month. And of course I tried my best to maximize that. So at the end of the year, I would have £2,400 in this account. 3% on that was actually just £40, which I know doesn't sound a lot. And that's why I said at the beginning of my video, if you do want to take financial freedom quite seriously, it's really unlikely you're going to do this with a savings account. But there is a place for having one. Me, it's an emergency fund. I think for most people it should be for an emergency fund, but obviously that depends on circumstance, so you do have to decide for yourself. So obviously if I'm gonna have to put my money into a savings account, I might as well go for the one that pays me out the most interest possible. But as I mentioned, please do keep an eye out on the interest rate as it is likely to change, especially over the course of 1 or 2 years. The 3% deal that I mentioned that I had with Santander, that actually only lasted for 2 years. And only recently had they changed it, so now I'm only getting 0.3%. So where I was getting £40 previously, I'm actually only getting like 10p now every month. So now obviously I'm in the process of shopping around to get the best savings account deal for me now. But because I am going through a mortgage application, I'm actually delaying the transfer just because I don't want to go through the headache of explaining to my mortgage provider why I'm doing sort of a last minute transfer to another account that I didn't declare before. So for me, I'm just holding out for a couple more weeks before making my switch. Rest assured that I will be doing it because having a look here, 2.75 on a regular savings account is way better than 0.3 that I'm getting now. So yes, look at rates, always look at your rate. Cool, so that's it for this week's episode for today. I would love to hear any strategies that you use when looking for a savings account. I obviously gave you 2 here, but I'm always interested to learn more. And as always, if you found today's episode useful, I would really appreciate a thumbs up. That's going to be really helpful for the growth of my channel. I upload a new video every Monday, so if you want to keep up to date with my latest content, be sure to hit that subscribe button as well. See you later.